totals, and that will give us our total inventory as of the end. So I'm going to sum these up, and we have the 4,000 down to the 7,2, giving us the 11,2. Then if we were to do the journal entry on this purchased here, then we're going to be here on V37. We purchased another 7,2. So that's this purchase right there. So we're going to debit inventory, and we're going to credit accounts payable. I'm assuming we purchased it on account. So I'm going to go ahead and post that. I'm going to double click on Z37, go to the end of it, and plus, then point to the inventory, and that should bring inventory up. So it brings inventory up to the 11,2, which is there. Then we can post the payable. I'm going to double click on it, go to the end of it, and plus, go to the 7,2 payable, increasing the amount we owe for the inventory. I'm going to left click this and snap it back over here like so. And we want to go to the next row. So I'm looking here. Next row is going to be row 41 or 42 in this case. And then we are on 325, which says that we purchased another 200. So we got another 200 that we purchased. So 200. And once again, the price went up on us. The price keeps going up on us here, and it went up to $62 in this case. So we got another 200 units times $62, cost another $12,400. Now, once again, I want to put all these layers right here. So as of this date line in our ending inventory, we want to put the layers that we have. Now, we ended up, as of the last date line, with these layers there. So I'm going to go ahead and copy those. We haven't sold those. Those are still there. I'm going to copy those. I'm going to paste them 1, 2, 3 values only right there. Then we're going to add to it the new layer that we have, another 200 units at 62. Copy that and paste it here. So there's our layers that we have. Then we can go ahead and make this large and post this out. Once again, we bought more inventory. We bought 12,002. So we're going to debit 12,004, and we're going to credit 12,004, increasing inventory and increasing the payable. We're going to double click on Z37 on the inventory, go to the end of it, plus point to the 12,4, increasing inventory to 23,6, and if we sum them up here, which I'm going to sum from here to here, as of this date line down here, and sum that up, and we get the 23,6. So 23,6, 23,6, it sums it up. This is backing up the number on the trial balance. Then we're going to go to accounts payable, double click on it, and go to the end of it, and plus, go to the 12,4 and enter. That'll put us back in balance, bring up the amount that we owe for the inventory we are purchasing on account. I'm going to snap this back over to the left-hand side, looking for the next column, which is there. So I'm going to put my cursor on F46, and we are going to go to the 329 transaction, which we sold another 160 units. So we're going from the purchase column to the cost of merchandise. We're going to represent the cost of the merchandise that was sold in this column, and we sold 160 units. Question is, how much, what was the cost of those units? So I'm going to do the same thing. I'm going to copy these. I'm going to copy all these different costs, these layers that we have, and try to figure out which of these layers were sold under the LIFO method. So I'm going to paste these here. These are the potential costs that they could have been, and these are the amounts in units that are in there. Now, in this case, we sold 160. Now, we're going to assume that we sold the last units. Again, that's kind of counterintuitive to most people, because you would think that if we were trying to sell something, we would try to sell the first units. But again, this doesn't really follow the physical flow. This is just an assumption. We don't know what units actually sold. We're going to assume we sold these. So that means that if there's 200 in there, we're not eating into any of the other layers. These layers will always remain as long as we have enough in the outer layer so that they'll always be there. So we're going to say that we sold all the 160 out of that 200, and they all cost 62, the maximum price that we paid for the inventory, because it's going up in terms of inflation. And therefore we have this. So we didn't sell any of these or these or these under this assumption. So you'll note that we have all these layers here. We didn't sell anything here. We didn't sell anything here. We didn't sell anything here. And so I'm going to list them all out so we can see that. And then if I'm going to compare these layers to, the layer to layer from this item here, we're starting off at this layer here. So I'm going to say of those 80, we sold 0 of them. So of the 80, we sold 0 of them. So of course we still have the 80 at the 50. If we multiply the 80 times the 50, those are still there. Of the second layer, we had 0, we sold 0. So I'm going to say of the ones that cost 55, we didn't have any more of those online. We didn't sell any of them, of course, at 55, so we still have a 0 in that layer. Next layer we had the $60 items. We had 120 of those. We didn't sell any of those. So once again, the 120 is still there. That layer minus 0 is still there. The 120 at 60 still there. And then of the 200, that's the one we sold the whole 160 out of under this assumption. Therefore, the 200 minus the 160 at the rate of 62 means that we have left now 2,480 of those. So as of this date line, if we add up all of these, that's the dollar amount that is remaining in ending inventory. So I'm going to say equals the sum of these items, and then we can report this, we can record this then. Now remember, we're going to record the first half of this remaining the sale at $95. So we have 60 units at $95 first, and then we're going to talk about the cost, this being the cost of the goods sold. So therefore we had 160 units at 95, that's what we sold it for, equals 160 times 95. So the revenue is going to go up by 15.2. That 95 not represented in this worksheet at all. That's the sales price. We don't really know how we got the sales price. The book told us the sales price. We're working with the purchase over here, the cost. So when we sold it, then if we double click on accounts receivable, if we sold it on account, hit plus, go to that 15.2 and enter. The receivable goes up. Then we can go to sales down here. Double click on sales, go to the end of it, plus, and revenue is going to go up like so, bringing net income up. So remember, net income is revenue minus expenses. Then we're going to report the cost of the goods sold and the reduction in the inventory. So the cost of the goods sold is all of this, which is basically just this number there. So the cost of goods sold is the sum of this cost item, and that's why it's labeled cost of merchandise. And then the inventory is going to go down by a related number. Therefore, we can post that by going to the cost of goods sold, going to the end of it, plus, and post this. That brings net income down, and then we're going to go to inventory, double click, go to the end of it, plus, and go to the credit in inventory, bringing inventory down to 13,680, which is what we have on our sheet here. So that's FIFO. So those are the two extremes, LIFO and FIFO. Those are the two extreme assumptions. And notice what happens to net income. Net income under FIFO is 8380. Under LIFO, it's lower, 7260. And assets are 14.8. And here assets are 13,680. So notice that LIFO, under a period of rising prices, which is a normal period where inflation happens, LIFO gives us a lower net income for the most part. Why would you ever want a lower net income? Possibly for taxes, because it might lower your taxes. So the only reason to really actually use LIFO that I would think would be to an attempt to make an assumption to lower the taxes. We're going to move on next time to the weighted average method.